Italtile was founded by the Ravazotti family, and that was in 1969.
Yeah, so believe it or not, this is the largest company in the sector. That tells its own story. It's a spectacular performer. It's a retailer, but really, as everybody knows from their stores, Italtile, CTM, and some of the other brands that they operate under. We're talking about porcelain and other tiles, Italian tiles, all sorts of ceramic ware, that kind of stuff that goes into new homes.
Market cap 11.6 billion rand, PE ratio of 15.8, dividend yield here of 2.1%. Chantal, let's get your thoughts on Italtile. They've recovered from the tragic incident involving most of their management team some time ago.
Yes, absolutely. And I think the key to Italtile's success is its diversification. Most people will probably see it as a retailer, as Paul mentioned, CTM and Italtile and all the others. But really, these guys are also very much focused on supply and manufacturing. I mean, these guys are involved in the taps and ceramic tiles and everything else that goes into their stores. They also own most of the properties that their stores are located on. So there's a property management angle to this business as well. And that makes it pretty interesting.
Do you like that property underpin, Paul?
Yeah, why not? Look, it's characteristic of these kinds of family-dominated companies. So the Ravazotti family you mentioned earlier, they own, I think through their subsidiary Rallin, about 62%, or maybe slightly less, of the enlarged group. And when I say the enlarged group, a couple of years ago they had two separate listings, which was Italtile and Ceramic. Ceramic being more the manufacturing business. They've brought those two together. From a management point of view, the Ravazotti family has stood back a little bit after the family heir died in that tragic crash of a plane on its way into Plettenberg Bay Airport about, it must be 6 or 7 years ago. But Nick Booth, who was the manager and then CFO, I think COO of the whole group, is now the CEO, and very stable, solid management. Remarkable in these trying times. Earnings 30% up every year.
30% up every year. Let's have a look at the share price graph. That'll give us a sense of how this one is actually performing and holding its own in a very volatile market environment, Paul, as you were saying, that earnings coming through strongly.
Solid, very solid.
Yeah,
Chantal, you can't ignore that graph and the performance.
No, not at all. And I mean, margins have been pretty stable. In fact, they've actually been improving. These guys are trying to extract further efficiencies out of that business. Top line growth is still relatively okay. I reckon that the exposure to the DIY kind of market and residential building is also a positive for them. Residential building has held up well relative to civil construction, and the DIY space has been very buoyant, which is, well, it's indicative of trying times in South Africa as well.
You're not sounding so enthusiastic about that top line growth, and we were throwing to that 30%. Year on year. That doesn't excite you?
No, I mean, it's very exciting. For me, it's just more about margin extraction and everything else that they can get out of this. But honestly, yeah, the revenue line's still going to grow. These guys know what they're doing.
Paul, anything you'd like to add before we call this one hot or not?
There's an Australian subsidiary that will help. Another thing they've done very well over the years is tailor their production supply system depending on what the rand's doing. So at times when the rand is weak or strong, then they will import certain things from China, otherwise they'll manufacture them here, assemble them here. So I guess that's a point to echo what Chantal just said. They know what they're doing. I think this is a consistent grower. The question is, at the moment you've got a business which is sort of swimming a little bit upstream. The market's not really feeling very positive about the sector. It's a very good company in a sector or part of the market that's
in a relatively soggy sector. Are we calling it hot or not, considering the management team know what they're doing?
It's very difficult because you have this high quality management team. From our perspective, that really does make a big difference. The growth outlook isn't too bad. The rating of 15 times historic really doesn't look too bad, given that you expect some really strong earnings growth over the next few years. So it's a very conservative hot.
We'll give that to you. It's still hot. Hot or not?
I think so, hot too. I think better times might lie around the corner, in which case quality player like this will rebound.